Hello traders, today we want to discuss how to merge or combine candlestick trading with key levels. How to merge candlestick trading with key levels, alright? So you have been using a candlestick pattern for some time, and probably you have been also facing a lot of trading challenges. You are wondering whether you should rely on those candlestick pattern. Today I want to reveal to traders how one can combine or merge candlestick trading with key levels. So as I have been telling traders before, whenever we hear the word pattern, the first thing that should come into our mind is location, all right? Patterns should click into your mind, location. So talking about candlestick pattern or candlestick trading, all right? The candlestick patterns usually takes place, or the most reliable candlestick pattern are likely to take place on or near key levels. There are two types of, in fact, I may say three types of key levels. The normal horizontal resistance level, all right? The Fibonacci key level, talking about Fibonacci extensions and Fibonacci retracement. Those are hidden, usually hidden key levels. We also have trend lines, all right? So when we are looking for reliable candlestick pattern, all right, we want to combine those candlestick trading with key levels, Fibonacci key levels, normal support and resistance level, and trend lines. This will help us to identify, okay, a more reliable candlestick patterns, all right? One more thing I need to say to traders, usually, okay, bearish candlestick pattern or bearish, like one example is a bearish engulfment, all right? Those type of bearish candlestick pattern are usually formed on or near resistance levels. And also, when a pattern, a bullish specific pattern is ending. So for instance, if we are talking about, all right, ABC bullish chart pattern at the end of that ABCD chart pattern, at the end of that bullish ABCD chart pattern, we are likely to see at the point D, all right, a bearish candlestick pattern, all right? So bearish candlestick pattern are likely to form on or near key level, also near resistance level. Bullish candlestick pattern are likely to form on or near key level, most importantly near support level. So we are likely to see more bearish candlestick pattern if the market pattern is bearish, if we are in a downtrend or when a bullish trend is turning from bullish to bearish. Those are the time when we are likely to see bearish candlestick pattern. All right, we are likely to see bullish candlestick pattern during a bullish trend. All right, we are likely to see during a bullish trend. All right, or when a bearish trend is turning from bearish to bullish. So you want to understand very clearly where you can find the best, okay, candlestick pattern that you can use. Another thing that I need to say to traders, which is very important, is that when you are using candlestick pattern, I'll tell you this story before, that when I start trading first, I go, for instance, on the web and I look for a powerful, excellent trading, okay, strategies. And then what I was doing, which is completely mad, all right? So you learn something that was powerful, and then I go to the lower time frame, 5 minutes, 3 minutes, try to use that trading strategy without any top-down trading method. And I was just losing because I'm using a powerful tool, okay, on the market noise, okay, it's not going to work. Lower time frame, scalping, especially if you're a new trader, this may not make any sense to you today. But feel free to disagree with me. Hopefully, it won't take you too long before you realize that what we are talking about here is a serious issue, all right? All right. So never discount the experience. All right. Very important. It's a mark to discount the experience. Okay. So when you are using candlestick pattern, please do not use candlestick pattern on the lower time frame alone. Now, sometimes it may work, but if you are looking for more reliable, solid candlestick pattern, you may look for candlestick pattern on the yearly chart, quarterly chart, monthly chart. Those are the best time frame where you are likely to see powerful candlestick pattern, especially if you are position trader. If you're a position trader, you want to use the quarterly chart and the yearly chart to look for candlestick pattern. A swing trader may also use quarterly chart, even a yearly chart, monthly chart, and weekly chart. Try to stay away from the candlestick pattern that we see on the daily chart. I will be talking about it in another video when I will say to you how do we combine candlestick pattern and a top-down trading method, or how do we combine candlestick pattern trading and different time frames. All right. In that case, we can use, for instance, if we see a bearish candlestick pattern on the quarterly chart, all right, and we see similar candlestick pattern again on the weekly chart, that similar candlestick pattern on the weekly chart is usually a high probability trading setup. It's about a fractal nature of the price structure. All right, so now let's go to the main topic today. Combine a key level. So I highlight the importance of using all right, the key levels. All right, use a monthly chart, quarterly chart, yearly chart, find reliable trends. So now on this chart we are looking at JP Morgan Chase and Co. This is an American stock, all right, listed on the Dow 30. And I have highlighted key levels on my chart. The first key level, you can see that the price went up here. I might talk it to myself. Let's zoom into it. Because now I want to start a tutorial or series of video about candlestick pattern. This is one area that I have not been talking about too much. So now this is the time, as we are entering 2017, I will be talking more and more about candlestick pattern. Now do not worry too much about the name, the complicated Japanese name of candlestick pattern. If you do care about those candlestick pattern, you may contact Mr. Steve Nissen. But don't worry about it. All I will show you here is to understand the candlestick pattern. You don't need to know the names of those patterns. You just need to understand what is taking place. So price went up and I changed the direction here. This is a key level here. I'll color that one into orange. That's the first key level. And here it is. This level here is the 50% Fibonacci retracement level. You remember when I was saying to you that we want to watch key level, including Fibonacci extension and Fibonacci retracement. So trust me, the price action from here to here, the 50% Fibonacci retracement level is this line here. I have done my homework. You can check it out on your chart. And I color it now into pink to save time a bit, okay? So that's why I've done it. So this is the 50%, the pink line is the 50% Fibonacci retracement level of the price action from here to here, all right? Now again, you can see that the price changing direction here. I've seen it's changing direction here. So this is also another key level, which I'm going to color now into green. We are talking about how to merge candlestick trading and key levels. So now we have seen more key level. And the last one here, you can see this candle, that's the top, round top. See, big top, round. This is another key level here. And I'm running out of color now. Which color should we use now? Let's use green again. No, we use blue this time, okay? All right, those are key levels on this chart. So price action from here all the way up here, we have key levels. So the first key level is the orange one here, all right? It's the orange one here. So as the price was going up, the price did not retest. There was no candlestick pattern. Oh yes, my friend. Can you see this one here? Can you see this tiny one here? Let's zoom into it, my friend. See this one here, price in that zone, you see, bullish candlestick. So you want to understand the bullish candlestick bar. So you see this one here, when you see the closing price start here and close also at the high. When the high of a bullish candlestick bar is almost equal to the high of that candlestick bar, it means that the market is very, very bullish. All right? So no seller managed, okay, to have any place in that candlestick bar. So the close, you can see that the opening price is also near the low of this candlestick bar, and the closing price is also near the high. This is a typical gorgeous, healthy, bullish candlestick bar. But look at the second candlestick bar that we have. It's a doji, all right? So you see, the price did open here and close a little bit below, okay, the opening price. So the opening price and the closing price is quite close, but it is also a bearish candlestick bar. It closed below the opening price. So by looking at this bullish candlestick bar, purest bullish candlestick bar, and this candlestick bar, what is going through our mind, because we know that this orange line is a key level, we will be thinking that what's going on? Last month was completely bullish. In fact, the month before was purely bullish. This month was purely bullish. What is happening now? Why this candle? As soon as this candlestick bar, remember the candlestick should close before we can even talk about candlestick pattern. That's why I do not recommend that you use the daily chart. All right, because sometimes people will see a candlestick pattern on a daily chart, but professionals are looking at another bigger candlestick pattern on a monthly chart. So that's why my recommendation that at least use the monthly chart, quarterly chart, yearly chart, and weekly chart. All right. So you can see the purest bullish candlestick followed by a doji. Doji means uncertainty. All right. So whenever you see the cross like this, all right, it's uncertainty. All right. And also not only that, it's a bearish, okay, doji. So at this point in time, we will say that the bullish momentum is diminishing because with the price did not, though the price did form a new higher high, it finished, okay, well below the opening price. So we will be expecting a reversal here. But look at this bullish candlestick, purest bullish candlestick, plus this bearish doji form a bearish candlestick pattern. Where at a key level, which key level? A resistance level. That's what we are talking about. So you will be looking at bearish candlestick bar around key level, around resistance levels. So those two candlestick bars are forming a bearish candlestick pattern. But the mistake that one will make is to jump, go and sell straight away. So at this point in time, you will draw a line. As you see here, you will say priority to bullish signal above and priority to bearish signal below, because you know the resistance level. So then you will apply your top-down trading method to trade it. You see here, so there was no signal to sell. The price went down a bit, but you can see quickly it went up. So do not fall into the trap when you see, because sometimes trader will see a bearish candlestick pattern, all right, at a resistance level, and they will just sell, but the price will continue to go up. But the problem there is it's not because they don't know how to trade. It's just because they fail to apply, okay, a multiple time frame trading method to control the risk. All right, signal fail, just come out. So let's look at the second key level, which is the 50% Fibonacci retracement level of the price action from here to here. Look at that. As the price went up all the way here, all right, it just pulled back very fast. And it stopped at the 50% Fibonacci retracement level. Look at the second candlestick bar, also tall. There is a warning here I want to tell traders. Whenever you are dealing with candlestick pattern, try to stay away from tall candlestick bar. So whenever you see here, there was this bearish candlestick bar down, very long, you see, followed by another bullish candlestick bar. This is what we call a bullish engulfment. When we have a bearish candlestick bar, followed by, okay, a bullish candlestick bar that is closing above the median line of the previous bearish candlestick. All right, so this is what we call a bullish engulfment. Now, whenever you hear the word bullish engulfment, you want it to take place at the support level and also at the key levels. So price pull back into the sweet spot Fibonacci zone, which is the 50% Fibonacci retracement level. But look at it. This is a bullish engulfment, but it's a long candlestick bar. Personally, what I would recommend to traders, whenever you see a candlestick pattern with a long candlestick bar, you need to trade it carefully, or you may stay away from it completely. All right? Try it and let me know whether it makes sense or not. Because the price already went up too much. If this candlestick bar, the long one here, close somewhere near here, somewhere here, that would be a more reliable bullish candlestick bar. But because the price already went away, you don't want to be the last person trying to catch the bullish move. After that, it went up a bit, but boom, 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 it came back down. All right? So be aware of the candlestick patterns that are taking place around key level with a long candlestick bar. Just let somebody else trade it and look for something better. Okay, you don't want to enter the trade. Okay, too late. Now, the price, when we pay attention to the green line here, where the price did change direction here, you can say that this bullish candlestick, this one here, we will finish soon, this bullish candlestick bar, followed by this bearish candlestick bar, is what we call a bearish engulfment. So bearish engulfment will take place at the top of a bullish move or at a resistance level. Can be Fibonacci extension level, can be a price target level using market geometry, projecting channel. So in this case, you can see there was a consolidation here. We measure the width for this consolidation and we project it up. Probably this will correspond to one of those price target level. Price target level, professional likely to take some profit, yes or no, can correspond also to Fibonacci extension level. But look, though this is these two candles, the bullish one here and the long bearish one, form what we call a bearish engulfment. All right. But you want to make sure, is it taking place at a key level? Is a bullish pattern being completed? All right. Is it a resistance level? Is it a hidden resistance level? All right. And then you see this is a bearish candlestick pattern, a bearish engulfment. But because we have a long candlestick bar, if it went down already, so it's too late. So those who will be trying to sell after those two candlestick bar are completed right here, are selling too late. So if you are trying to sell here, you are selling to support level, which is a 50% Fibonacci retracement level. That's why my recommendation is that whenever you see those long candlestick bar forming a specific candlestick pattern, stay away from them. So though this is a bearish engulfment at the resistance level, you see this long candlestick bar, the price already went down. And the same thing happened again here, the bullish engulfment, and it went up too fast. Okay, here again you see this is a resistance level, the blue line here, boom, 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 boom. Look at that. So price was going up. So you are looking for bearish candlestick bar. Look at them. Look for bearish candlestick pattern at the top of a bullish move. Look for bullish candlestick pattern at the bottom of a bearish move. Now remember that we are likely to see more bearish candlestick pattern in a bearish trend. For instance, on the edge of a declining trend line. All right, so price goes down, displaying lower lows, lower high. We connect a high and a lower high. Now we have those bearish trend line. So we are likely to see on the edge of a bearish trend line, okay, after the price from a new lower low, very important, from a new lower low, and rally up to the edge of the declining trend line. We are likely to see bearish candlestick bar on the edge of those key level. This time we are talking about trend lines. All right, all right. So here we are. Here is a resistance. Price. Look at this. So this is a bearish engulfment again. Look at that. Look at this. But there is a bit. One thing. This is what I want you to understand, because you do not need to know the names of those candlestick pattern. All you need to know is to understand the price action. So price was going up, was very bullish. They push it very, this is usually happen. This is exhaustion candlestick bar. This one here is an exhaustion. You see, people are selling prematurely. This is an ordinary trader selling prematurely when a professional trader want to sell at the best place. So they push it there. What they usually do, they will place orders here to sell before they will push the price into those orders to be filled. This is an exhaustion candlestick bar into a resistance level. Now, look at the second candlestick bar. Those orders were filled to sell, and the price ramped down very fast. Okay, see, it went down very fast to this level, the previous key level, 51.38. Now, though those two candlestick bar form what we call a bearish engulfment at a resistance level, all right, you need to understand what is happening here. It's a bearish engulfment, but look, again, this is what we are saying to you. You see, again, it's a long candlestick bar, yes, all the way here. But as the price went down all the way to 5138, it quickly closed up above the median line. So anytime you are looking at candlestick bar, compare the closing price to the median line and also to the high and the low of that candlestick bar. Am I making sense? So this is a candlestick bar, okay? All right. And the median line is somewhere here. All right. So you want to know, you want to compare the closing price to the high, to the low, and also to the median line. All right. If the closing price is near the high, it's very, very bullish. If the closing price is above, okay, the median line, that's good. All right. It's bullish. If it's below the median line, it's bearish. If it closes near the low of that candlestick bar, it's very, very bearish. So though this candle, those two candlestick bars form a bearish engulfment, this one here got a tail. Now understand that a bearish candlestick with a long tail, the long tail section, you see here, oops, hold on please. Let's see how long we have been talking now, 21 minutes, we will wrap it up soon. I'm aware of the time. So remember this. The long tail of a bearish candlestick bar is highlighting a support zone. So though there was a bearish engulfment on this monthly chart here, the price already went down. And those who sold it here took their profit here. That's why we have a long tail. You can see that the following candlestick bar was not bearish anymore, but was bullish. Is because those who failed to come, you see, the first people who sold it here took their profit here. All right, and then the price closed here. Now, as the second candlestick bar start opening, okay, it went down a bit. Remember that there are still other traders who sold it here who are not yet out of their trade. So they're giving away some of their money as the price quickly went back up from here. So those sellers are selling now. So they are closing their bearish trade. This is what is forming this bullish candlestick bar, forming the bounce up. Then the price return back, return again to that resistance level where they sell it down again one more time. All right. So long, you see, this is a bearish engulfment, but with a long tail, that's not a good one. All right. So long tail, all right. Bearish engulfment with a long tail, be very, very gentle. All right. Next thing is to restart again, like this is what we do when we are counting earlier wave. When the second wave counts to the first wave, we start counting wave. So if you see that the pattern, this is a bearish engulfment with a long tail, we will prefer to bring the price back to the beginning again. All right, because you don't want to sell here. Sometimes it may go and go down. So what you can do is to draw a line at the low of that candlestick at the closing price and say, okay, prior to bullish signal above and prior to bearish signal below to control the risk. But because this bearish candlestick bar got a long tail, which means there are buyers here and there are also sellers here. All right. But if we want to sell into the rally. So we will wait for the rally, which is this candlestick bar here. Okay. All right. So if you look here again very fast, you see again we are the price finally return back to this orange line. So first time we were here, you see here we have again. This is what we are talking about. This is again a bearish engulfment. So this is a bearish candlestick bar all the way to the level of $18.41. If the bearish momentum is intact, the price will form a new lower low. But as the price dip below it, it got a tail. The tail is what? Support. All right. And quickly close up. Look where. So compare the closing price. The closing price is here. You compare it to high. It means that this candlestick bar here, always compare. Anytime you look at candlestick bar, you see this one here. All right. The closing price is near the low, which means this candlestick bar is very, very bearish. This one here, the closing price is near the high. This candlestick bar is very bullish. So we have a very bearish candlestick bar followed by a very bullish candlestick bar at a key levels. All right. Okay. So I recorded a video recently that can help traders. The title of that video, I'm looking for it, traders. It's about candlestick trading. Discover, that's the title of that video. Discover a simple candlestick, okay, technical analysis. Discover a simple candlestick technical analysis. What I was telling traders is to use two candlestick bar, highlight the high, the low, and the median line of each candlestick bar. But you need two candlestick bar. So you see here, so we will have, whenever you see this, so you see this is a bullish engulfment, a very bearish candlestick bar, followed by a very bullish candlestick bar. You don't need to know the name, you just understand it. Now highlight the high, the low, and the median line of the first candlestick bar, and highlight the high, the low, and the median line of the second candlestick bar. And you are looking for bullish trading setup around those key levels, okay, and also near this key level where that candlestick pattern is formed. Okay, so this is the key level where the bullish engulfment is taking place. But you can also use the high, the low, and the median line of the first candlestick bar, and also the high, the low, and the median line of the second candlestick bar. And you are looking for, okay, trading setup around those key levels. It's a bullish engulfment at a key levels. Look at this one. This candlestick bar, is it bearish or bullish? This one. So you want to compare the closing price either to the high, the low, and the median line. This one is closing, talking about this bearish candlestick bar here, it closed below, a little bit below the median line. So it is bearish. Okay, it is bearish, closed below the median line. So therefore, it's bearish. But it's not very, very bearish because it did not close near the low of that candlestick bar. Pay attention to the second candlestick bar. We are talking about the pink line here. Look at the second one. Is it a bearish candlestick bar? It is a bearish candlestick bar, but it is not very bearish at all because it closed above, okay? It closed above the median line. All right? Though it looks bearish because it closed below the opening price, it is bullish, in fact, because it closed above the median line. So price went down all the way here, but quickly closed above the median line. Is becoming bullish. So first time it was bearish, but as it was about to close, it became bullish. So this candlestick bar and this one is telling me that the bearish momentum is diminishing. So this one was very bearish, was okay bearish. This one is not bearish. Now it's telling me, those two candlestick bar are telling me that, all right, George, the bearish momentum is diminishing. Where? At a key level, support level. You see here, we have a bullish engulfment here before, and here we have a bearish momentum that's diminishing. So what I understand, be prepared to give priority to bullish signal above the 2909. Now look at the second candlestick bar. Okay, it opened here, didn't have any tail at all. It just went up all the way up here and closed above the median line. It is a bullish candlestick bar. All right. Okay, and the following candle bullish. And in all cases, you are analyzing the price structure around those key levels, trying to interpret the language of the candlestick pattern, and then you implement a top-down trading method to trade it. Very, very important. Very powerful. Very powerful. We'll be recording another video when we'll be talking about how to combine candlestick and candlestick pattern and different time frame. One more time, you can see the price went back again to the same level. Very bearish candlestick. How do we know? It closed near the low and followed by a bullish candlestick bar because the opening price, okay, is here, and the price closed, okay, just above the median line of the second candlestick. This is a reverse of candlestick pattern. And look at the following candlestick. People just bought it. Open here, very beautiful bullish candlestick bar. All right. So this is a bullish candlestick pattern at a key level. You see, key levels, key levels. That's what you want to do. This is what you are looking for, and look for it on the quarterly chart because position traders use the quarterly chart. If you're a swing trader, use quarterly chart, use monthly chart, all right, use weekly chart. All right, stay away from the market noise. All right, this is the end of this tutorial. All right, we were talking about how to merge candlestick trading and key levels. All right, so whenever you see a candlestick pattern, All right, think of location. Reliable candlestick pattern will take place around key level, either resistance, normal resistance support level, or Fibonacci extension or retracement levels. All right. Okay. All right. Also, trend lines. All right. Use candlestick pattern on the higher time frame. Do not spend too much time on those useless candlestick pattern that we see. Okay, on the 5 minute, 3 minute, okay, or 10-minute time frame. All right. Use a higher time frame and then drop down to the lower time frame to trade it. Whether you are day trader, swing trader, or scalper, you can do that. Okay. Right. I hope you have learned something from this tutorial also. I will put into use, okay, to make excellent, all right, candlestick trading decision. If you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. We will be recording more videos about the candlestick trading and sharing more powerful tips and tricks that trader can use. Happy trading to you all, and speak to you soon. We are the TSTW24 traders, talking about how to merge candlestick trading and key levels. Speak to you soon.